one of the most important moving averages. Now, in my opinion, the most important moving average out there, and I shouldn't say the, but one of them, if not at times the most important, is the 200 period. Everybody looks at a 200 period moving average. I don't know where 200 days or how it became so prevalent, but it is. And we used to talk about this in the 90s. We used to call this the brick wall. And, you know, just showing you guys that Apple chart, right? Weekly chart of Apple, look where it went to, right to the 200 MA. And then, you know, it's been fighting and bouncing ever since. So the 200 moving average on all time periods, whether it's a daily chart, weekly chart, monthly chart, critical, critical, critical. In fact, another stock that just got defended was Tesla on the weekly chart, 200 MA. I mean, they've been defending this thing, you know, here, broke below, recaptured here. Now again, look at that. So the 200 MA, I mean, on all time frames is extremely, extremely important. I can't really say it enough. It's probably one of the most important moving averages out there, especially when it comes from an extended point. And that's the only time a moving average is major, when price comes from an extended point directly into it without consolidating above it. So again, we'll cover all of this going forward, and let's get started here on a 200 period moving average. Back in the day, we used to call it the brick wall. Here's a chart of Chevron, and this is a monthly chart. So you want to use all of these different time frames. A lot of times, what I often see traders do, you know, they get fixated on the daily. You know, if you guys see me, I'm always looking at every time frame under the sun, right? Where somebody's looking at one thing and I'm looking at another thing, and then I'm saying, I don't know, I don't think so on that one, and they'll say, yeah, look at this, and I'll say, all right, well, look at this, and then, you know, the bigger time frame is always the more dominant time frame. So you guys always want to remember that. All right, taking a look at Chevron, goes above 130, trend is up, all of a sudden cuts through, gets down to the 50. This is a monthly chart. You get a nice little bounce, looks like a potential test candle there. Then you get the reversal back down, starts to sell off. Look at this inside bar on the monthly chart. Boom, breakdown into the 200. Now, real quick, with just the data that we have on this one graph, would that 200 MA be major or minor? Major. Can you take a trade off of that? Yeah, you got it, Dan. Imran, what would be your factors for a trade? You got it, Parham. Well done. Yeah, you got the $70 whole round number. Now, even if you didn't take it here and you get this, those of you that know time counts and things like that, that sets up. Then you get a nice little inside bar. Then this thing starts to work its way higher. Would this 20 MA be major or minor right here? Right where my cursor is. Minor, yeah, minor. Then it consolidates. Nice little bullish consolidation pattern, then pops through. How about this 50 MA here? Would this be major or minor? Minor. Now, if we went right up into it, it would have been what? Major. But we didn't. We consolidated here for about 8-9 days, then went through it. Becomes minor. Okay, so you see how these things constantly shift? We really never know what it's going to be until the pattern unfolds itself. Then we have a determination. We can say, okay, minor, okay, consolidating, major, all right, and that's how you go about it. Everybody got that? But yes, you can take this trade off that 200 with the $70 whole round number. Okay. Imran saying, Nick, the first 50 moving average, it did not bounce. Here, where are you looking at? I'm sorry. Here? At the end here, you're talking about? Right here. It did bounce. Look at that. Pierced. Then you got a monster bounce. right? Look where it finished, all the way at 120. Then the next month, it went back down, and it closed below the 50 MA. So would that be a strong technical position or a weak technical position? Yeah, it becomes weak, right? Close below the 50 MA. That's pretty big negative. Look what it does here. It goes down to 100 or real close, and then it bounces again. Then you start consolidating. Then you come close to your crossover. Then you get your spacing, and then at that time this thing had already nosedived all the way down to the 70 level. And then we get the reversal, back up. But there are other techniques. We're going to talk about putting more pieces of the puzzle together in a minute. Right now, I don't want to stray too far from where we are. All right, here's Mondelez. And again, this is a weekly chart, and this stuff is all the same. It doesn't matter if you're using a 10-minute, 60-minute chart, daily, weekly, monthly. Now, real quick, if you have a bullish pattern on, say, a daily chart and a bearish weekly, do you want to pay attention to that bearish weekly? Absolutely. Okay, because it's a bigger time frame. It's more dominant. So it's not to say you can't get a bounce on your daily, but remember that weekly is talking to you. It's telling you, hey, we may not get much out of this, and you may not even want to do it at all, right? This business is all about odds, right? Sometimes I see members, traders, hey, everybody wants to be in something. But believe me, you want to be in something when the odds are in your favor. There's nothing like winning on a trade without any stress. I don't want to be in the market fighting a trade. It's the worst feeling in the world, right? You want to be in the market when the market tells you, hey, the odds are here, take this trade. So let the market talk to you. And the way it does it is by telling you all of these different trends and setups on different time patterns. So again, if we look at this chart here of Mondelez, you're going to see price comes from 47 down to 43, consolidates. Look what it does again, inside bar. You're going to see inside bars your whole life now. And then boom, we go from, basically 44 and a half all the way down to 40, 41. You hit it picture perfect, give it a kiss, and then you get a quick little bounce. Okay? So price coming from an extended point, a lot of times you'll also notice, and I'm jumping around because we got a good group tonight, so I could do a little more and a little extra with you guys. A lot of times what you'll see is you get this nice little measured move. Okay, this from 47 to 43, 4 points. From 44 and a half down to 40 and a half, how many points? 4 points. Markets love to do what? Anybody remember from the methodology class? Love to? Yeah, symmetry. They love to repeat themselves, right? It's like you and I. We love to go to the same restaurant. A lot of us like to eat the same food all the time. Not so much me, but we do the same things. We're creatures of habit. So we like to do the same thing over and over and over and over. Okay? Excellent. All right, here we have a chart of Walmart, monthly chart. So you guys could see these big time frames are very, very important. All right, so here we have Walmart, 90 bucks, it peaks. Look what it does here. It cuts, only has 1 month, sits at the 50 MA. Is that 50 MA right there on the monthly, major or minor? Anybody? Yeah, it's major. But what happened here? What happened here? Why did this go right down? What happened there? This is a good one. Well, the trend is up. Trend is strong too. Trend is up. Nobody got it? Hong, you get it? Yep, Hong got it. Excellent. Anybody else? I'm going to give everybody a minute. So here's why this broke down. And this is something I always tell you guys. Hong nailed it though. See this wide range bar? Monthly candle? What did price do here? Closed below the green bar low. Inside bar, failure. Inside bar, failure. Best moves come from what? Failed moves. The best moves come from failed moves. And that's why this only stalled there. Now, to its credit, it paused. But once you see an inside bar pattern fail, you gotta be aware of that. That's a big wide range bar too. That's not a little bar. That's a monthly breakout, right? Monthly breakout. Now, this wouldn't be exhaustion on this one, Anjali. The reason why it wouldn't be exhaustion is because you based. See how you based here? Long base. So then you would look for an inside bar to go higher. You'd say, all right, let it consolidate. But look at this. Once it closed below, that's a sign of strength or weakness. Weakness. Never want to see that. That's kiss of death. Yeah. So that right there, once I see something like that, I don't even want that 50. That stock's got to prove itself to me, because to get to cut below a wide range bar like that is really, really a problem. That should not happen. Now, to pierce it and then to close back above it, you like to see that, because that shook people out, and then you go right back up. But to see it close below there, see that? Right there, close below there, that's a sign of weakness. So you got down there, held for a month, and then boom. Now, is this 200 MA major or minor? Major. Yeah, that's major. Can you take that trade based on what we're seeing here? Just trying to draw it straight, right? Absolutely, scene of the crime. Yep. 200, scene of the crime, major 200. Excellent. Well done. XLE. First thing you want to note, comes down, bearish inside bar right there, first off the bat, right? Everybody see that? I'll cover that more for you, Imran. I'll cover that more for you. Let me just go through a little bit more. Everybody see that bearish inside bar right here? Boom, never could get back above it. And then what does it do? Plunges. Okay, so you always want to watch inside bars. Looks like it held here. And the longer you consolidate in a bearish manner, the more you're going to break. Now the 200 MA, major or minor? Anybody? Yeah, major. Well done. Yeah, it's major. Excellent. Major and get a nice little pop. Okay. Now we got to look for a secondary factor here. You don't really have a whole lot on the chart telling us what it is, but yeah, that's major. All right. Here we have a chart of myelin. It's a little trick question. So stock peaks out. What does it do here? What does it do right there? Get this big surge, goes above 75, pulling back, closes below the green bar low. That's the first thing you guys should see. Closes below the green bar low. Sign of weakness, Shashir, or strength? Yeah, that's weak. That's weakness. Okay? Anytime you have a big move and you close below that low, that's a sign of weakness. Okay? Always. Look at the volume too this had. Monster volume. And you close below the low. That right there would scare me off. So look what it does. It goes from 75, and this is a monthly chart, right down to the 50. Major or minor? Major. Can you take that 50 MA? You sure can. Yeah, you sure can. I already see other factors that I'm not even going to talk about that are on here that I did not put on the graph. But here, just alone, you got a breakout bar right there, right? So that's a nice wide range candle right there already. Comes right down. You could take that, and look what you get: 3-month bounce into the 20 MA and the red bar high. Markets love to do what? They love to go into red bars, and then you come back down. Okay, now here you got a down move, bearish consolidation. Would that 200 MA be major or minor? It's a trick question. It's tough. I put this in here for a reason. And the reason why I put this in here, because I struggled with it. And you're going to see stuff like this. It's not always going to be so clear as day. Now, coming from, basically 40 bucks down to 25 and a half or so, it's kind of an extended move, right? Kind of a long position. Now, you got bearish consolidation to get there. Then you got scene of the crime right here. So generally, I would say, yeah, you know what? This should hold up. This should be decent, right? It should be decent. Let's just take a look at Mylan and see what it did. So that was back in, erase all this stuff, right? 2017. So we're looking at 1, 2, 3, 4, 5, 6, 7, 8 months. So we never, ever got there. Look at that. This is it right here. It stalled, and look where it is now. It's there now. You see that? It never got there. So I put that in there because I was waiting on that and saying, well, do I want that? Maybe I don't want it. Do I want it? It's a good level, scene of the crime. I love to find those, but I wasn't sure. So look what it did. It bounced all the way back up. Inside bar too, took it out, went all the way up to this 50 MA. Now it's back down, and what's it doing here? Consolidating. So to be honest, I don't even want Mylan anymore. But do you see how that played out? So sometimes, you just got to wait on these levels because you just don't know what's going to happen. But I honestly was looking at it saying, wow, this consolidation should get there. And it didn't get there. It actually reversed and went back up. So sometimes markets will do things, but you're not a part of it until it gets there. But they just wanted to show you guys that it's here now. And that's a year ago. And now here we are at the 200. We're actually below it. So pretty interesting stuff. Not yet, Anjali, because we don't know what this pattern is yet. You really want that pattern to stand out to you when you get that pivot pattern in there. We don't have it yet. Mary's saying, Nick, that's why you always say it depends on how it comes into it. That's 100% right. Yeah, I always say it, and for that reason, because you just don't know. These patterns can shift on you. They could change on you. Sometimes, one thing I've learned over the years, this is funny, and you guys might realize this too. Some of you I know have already broken the spell. But how many times when you learned a head and shoulder pattern, right, or an inverse head and shoulder pattern or a head and shoulder top pattern, you said, oh, that right shoulder is forming, and you already got into the position and it didn't even trigger. How many people have done that? I know I'm guilty of it years ago. I've done that because I see, oh, that pattern is there, and I assume that it's going to, oh, this is going to be, a major head and shoulders, or this is going to be a major inverse. I'm getting in now. And then it never happens, right? It doesn't even trigger. Or, it triggers and then fail, so again, you don't ever want to assume in this business. Just let the pattern tell you. I've done it. There's nothing you guys could do that I haven't done already. I've done it all. I've made the biggest blunders and mistakes and survived them. So again, when people look at me and they're like, oh, this guy is so cautious, but that's why I bat 85%, because yeah, I take only the best trades. And that's what you really, really want to do. So again, when you look at all of this stuff and you put it together, all you're really doing is putting the odds in your favor. You're not looking to take a bad setup. But again, sometimes these charts will change on you instantly, and it really can, disrupt everything that your mind was thinking. There's an old saying in this business from an old trading buddy of mine, and we all used to use it. We used to say trading is difficult enough, and thinking just gets in the way. So you don't ever want to think. You just want to just trade it once the pattern tells you to do something. All right, let's get back. I don't want to get too far off course here. So yeah, that was pretty interesting. I thought how it played itself out. Here's the IWM. So nice little sell, right? This moving average right here, major or minor? Major. You get a nice little bounce. About 3 days. Third day turns back down. How about now? Right where my mouse is that major or minor? Second time, minor. First time major. Second time around, it's minor. Yeah. And look where we go, right down to 134. And then you got all these little pivot support areas there. But yeah, that's these things, when they're tagged and then you go back above them, you come back down, they become minor. Okay. Real quick, how about right here? Was this major or minor? This is a 50 MA where my mouse is. Yeah, that's minor. Why is that minor, Paul P? Consolidated above. Absolutely. And look how tight that was. So it wasn't much spacing between. Consolidated, this becomes minor. Excellent. All right, here we have United Technologies. Would that 200 MA become major or minor? Major. Yeah, major. Could you take a trade there? Absolutely. Absolutely. I think we did, actually. It's always one of my favorite stocks. All right, any questions? Any questions on the 200 MA? Right, we see the 200 MA all the time. I showed you guys, the Apple position, how that just came in on the weekly into that 200 MA. Look at that. Perfect kiss. Then you've bounced up, right? I think Boeing, did Boeing do something today with the 200 or no? Oh, it came close. Didn't come there. Yep, came close. Went to gap. Okay, then you got that big reversal there. But you'll see this stuff all the time. It just repeats itself over and over and over. And Jolly saying, Nick, you said that price was the move from 200 MA to 20 MA should have been major level because it consolidated near 101, so the 50 becomes minor. Yes, that's right. Once you consolidate, that 50 becomes minor. Excellent. Yeah, that was, let me just go back to our charts. Was it here? Yeah, that was this chart, IWM. See how you consolidate it right here? So that becomes minor. Okay. And you guys will get a copy of all these slides too. Okay. All right, let's talk about major and minor support, which is what we've been doing already. We got a really good group here today. I know most of you, a lot of you I've met personally as well, so I feel comfortable jumping ahead. If anybody is confused at any time with anything, please just let me know, and I'll slow it down and we'll go over it. So just as a rule, when price declines into a moving average from any extended distance, that moving average will be major. Okay? The only time it won't be is when? Yeah, when you consolidate above. Okay, excellent. Here's a case where we do that. So price comes down, and what does it do? Consolidates. So what does this moving average become, major or minor? Yeah, minor. Minor. I'll cover that, Fernando. That's all methodology stuff, but I'll cover it a little for you a little bit later. Okay? I don't want to get too far off track at the moment, but I'll cover it for you. Just give me a little bit of time. We'll run into that scenario plenty of times. It happens constantly. Okay? So here, down move, consolidation. Then we move down into moving average. That becomes minor. Why? Because we consolidate it. Now, what if you get something like this? Major or minor? So it's kind of slanting down there. What would it be? Yep, Bill's saying it looks a little minor. Rod's saying it could be major. Osrin saying maybe major. Here's the rule. If you don't know for sure, what do? That's why I put it in here. Yep, nothing. Stay away. Pass on it. Right? Don't do. Yeah, if you're not sure, that's why I made this one, because it's tough. Right? Sometimes these things come at you and you're like, it's a discretionary rule. And if you got to, think about it, you don't want it. You don't want it. Right? If you got to think about it, you really don't want it. Okay? So sometimes these things aren't the easiest things to look at. You want the equities that come in and they're easy to see. There's no thinking involved. It's just like, wow, it's right there. It's talking to me. I'm going to take it. Right? But we can make a case both ways. It's minor because you consolidated here. Some people would say, well, it came right in. It never didn't, it kept making, basically lower lows and it came right in. I understand. But if it looks and you're not 100% sure or 90% sure, skip it. There's no need to even do it. You could get the next one. What is that? Major or minor? Yeah, it's major, right? Coming right in. Cleaner. It's cleaner, right? So a lot of times, you get these moves and they come into a support level or a moving average, or it could be any other support levels that we use, the other dozen. And you can't really, if you can't decipher it, just leave it alone. Pass on it, right? We don't even need to do it. Who cares? We'll go to the next trade, right? We don't want to put our money at risk when we really don't have to. So when in doubt, write this down. When in doubt, pass. When in doubt, leave it alone. Don't do it. Lily saying, Nick, does the rule apply to all the time frames? Yes. Same stuff for every time frame. Now, real quick, Lily, I want to just give you this one. If you got a bullish pattern on a daily chart and a bearish weekly, which one is more important? Bullish daily, bearish weekly. The weekly. The bigger time frame is the more dominant. Okay? The bigger time frame is more dominant. Saeed, how are you? Saeed saying, Nick, if angle is less than 45 degrees, will it be major? Probably not. But again, I'd really need to see it. I'd really need to see it. Probably not. I usually keep a protractor on my desk, but now I have an office, so I try to get away since I had a baby and a dog at home, but some days I work from home. I left the protractor at the office, but normally I'll pull it up to the screen and I usually draw it. All right, let's get going. Let's go to the next one here. Okay, so here we have a chart of Lennar Corp. This was one of my trades from long time ago. Great, one of my best trades ever. Here's a good old daily chart. Notice crossover, notice the spacing. What is your trend? What is your trend? Up or down? Down. It's the first thing we want to look at. We want to train our eyes to look for that trend. Okay? Now we know prices falling. Got a nice little bottoming tail there. So it looks like market wants to put in a bottom. What is a 20 MA? Major or minor? Minor. Why? Why would that be minor? We're coming all the way from 28 bucks into $32. Why would that be minor? Got it, Dave. Yeah, price is parallel. Well done. Yeah, you can see like price is parallel. Just draw that line along your price. Say, wow, that's parallel spacing. Okay? So we know that's, but what about the 50? Major or minor? Major. What are your factors there, Parham? Can you take that trade? What are your factors? Ah, good. Yeah, I like that, Dave. Yep. Dan, yep. What about this? $37 whole round number. Prior pivots right there. MA, there's some other factors I'm not mentioning, all methodology stuff, right? So you got a lot there, and if you want to take that trade. Okay, you got a lot there if you want to take that trade. Everybody see that? Now, real quick, what would your stop out be? So if you take the trade short right here, what would your stop out be? Yeah, I would say any close above 38, right? Or you could go, if you wanted to go with, say, over here, a little higher, but somewhere a close above 38, right? You got to give it a little leeway because very, very often things will pierce, and what do they do next? Where do they go? Just say where it pierce, it goes into the whole round number. So you don't want to get stopped out. You wait for a close above that 38 level. Everybody follow? Because what do markets love to do? Do they love even numbers? So just say before you became an in-the-money stocks trader, and you're sitting at home, you got an E-Trade account. How many of you sat there and said, hey, I'm going to put an order in tonight for tomorrow, and I'm going to short it I'm going to buy at 38 bucks, or I'm going to buy at 36. Not many people at home are ever saying, hey, I'm going to short this stock at 36.47, or I'm going to short this stock at 36.98, right? They're always looking at the whole round numbers, right? The public is always looking at whole round numbers. So we always got to watch that, the market makers will take them into the whole round numbers. That's why we see whole round numbers hit so often and stop right around those levels. Okay. Excellent. All right. Here's a chart of Alibaba. Trend is up. Okay. In this chart, the 50 and 200 MAs are major support, right? Because price is doing what to the 20 MA? It's parallel, right? So the 20 is minor, 50 is major, 200 is major, right? So you always remember, when price comes from an extended point, usually the first, when price is running parallel, this will always be minor. All right, I'm going to show you guys in a little while when we get to it, probably another 30 minutes, 40 minutes, where we're going to actually see how to use the 20 MA when it's major and minor, okay? Max saying, Nick, most institutional analysts also have price targets at whole round numbers. Good point. Excellent. Yeah, I agree. I agree. I agree. You see it all the time. So just remember, we always got to be, in fact, look at this chart, 80, 180, right? Whole round number. It just 150, 150. Look at this. You see it constantly. All right, so the 100 period moving average I added in last year. And I got to say, it's been worth its weight in gold. In the past, I didn't use the 100. In the 90s, I used it a bit. And then I found it just wasn't working. And when something isn't giving me good results or I can't really rely on it, 70% of the time, I discard it. I'll just stop using it altogether. But what I did notice was it started working again, and probably, started working in like 2016. I started to notice it. By 2017, it was full-fledged. It was working, and it's been working ever since. So I added the 100 period moving average, simple on close, and it's been very, very effective. Here's a chart of Apple. Look how this thing is hit the 100, hit it here, sold off, hit it here. Look out, that was